Here, recording this video after close of trade Friday, 1st June 2012. Well, we finally got that big down day. I was looking for like a 3% down day. Day was down 2.5%. Kind of finally happened. Just a quick note, I apologize the last couple of days. The emails have been all kind of screwed up, kind of coming out late. Just as a note, trading in Sydney, Australia is a little bit tricky. The time zones are kind of all screwed up here. It's much better, nicer in France or Hawaii. But for me, the market opens 11:30 p.m. at night, and I'm kind of trading and watching the markets till about 2 in the morning, something like that. And then in the morning, I've got till 10 a.m. to get a video out and rendered, and all my charts checked and all that kind of stuff. And sometimes I just miss that window by about 10 minutes if the rendering of the video kind of takes some time, and that's what happened over the last couple of days. Just missed the window. Anyway, so that's why you might be getting two kind of emails at once. You can always check the site or subscribe by one of the faster means, RSS or Twitter or something like that. Get notified when the videos are out. Anyway, let's talk to charts. And here we are, 1273, 2.5 million contracts traded. We're in a downtrend. We're below cyclical support here. I thought, 1290 was absolutely this key kind of level. We cracked through it with all the bad news out of Spain, out of Germany, all the PMI numbers that came out around the world kind of over the last 24 hours. And not to crow about this, but I did say that a critical cyclical turning point was the Apple chart here, and there it is, dirty end of trend. So Apple raced way up into the 600. The runaway move from the beginning of the year has just been kind of exponential. We kind of go into all these exhaustion patterns, and finally a flush pattern at the top here on the daily chart. Find a pullback level, all these amateur bars here, and then cyclical resistance kind of comes in here. That's kind of today. It's a dirty end of trend because the pullback level has been violated here, which just shows weakness, in the markets. That's the dirty end of trend. You can see the cyclical resistance kind of comes in here when we get this kind of cross confirmed. So there we go, and all kind of lining up. And again, not to kind of crow about this, but this is the commitment of traders stock market crash warning indicator, and with today's activity we're now down 10% off the highs. So this signal kind of says crash. I mean, a correction is 10%, crash is 20% kind of normally. I actually think this is going to go further. I think we're at the beginning of one of these things here. And everybody kind of, if you're a regular kind of watcher, listener, you kind of know my kind of bearish stance on these things. But it's just kind of interesting in terms of like a Elliott wave kind of pattern. First wave, correction wave, second wave, correction wave, third wave kind of, and is this beginning of kind of a bigger move? So I would think yes. Commitment of traders numbers aren't out yet for TradeStation here, so that's why this number's just showing a parallel number here. But there we go. That crash warning indicator was pretty good, and this is what we're through. We're through this important kind of trend line here, and that's why I think it's going to be a bigger move. The thing that kind of stopped us the last time that we had a bounce was the announcement of QE, the twist kind of program from the Fed. But don't forget that announcement kind of came, and all these QE and type announcements come after the market has cracked down a fair amount. This hasn't been yet a big enough kind of correction to get everybody seriously worried, and I think actually any kind of QE announcement is going to be a combination of something coming out of Europe. If it's going to be ECB, there's kind of talk at the moment about the Fed and Timmy Geithner kind of getting involved in Spain and all that kind of stuff. So but I think it'll happen after we get one of these kind of waterfall moves, something like that. And to be honest, with Friday's activity, all we got was the break of the trend line. So I'm going to look for this to kind of accelerate on the downside. But there's always going to be rallies. There's always going to be places where it stops, and kind of we have retracements and all that kind of stuff. But all I'm saying is I think this is an important break. And in terms of better X trend, we kind of turned around the last couple of days here, and now we're trailing this stop down with big kind of trend moves down. Trend oscillators showed this chart yesterday. This is looking nice for picking up profits on all this cluster of sell signals that came in on the trend systems. We're only at minus 47 on the trend oscillator. Oversold is minus 100 here on the put call ratio. Same thing. We're kind of coming down here, but we're not kind of reached these type of oversold type levels. And so what I'm looking for is this to make new equity highs. Just pull up the equity chart on this, the equity line on trend. So we're kind of really close to those new equity highs, and there are so many contracts outstanding at the moment on these. I think that's why we'll punch through and make new equity highs. This was released, just so everybody knows, kind of back here So this, these series of systems have been doing quite nicely ever since they were released, and not a line of code ever changed on those. And interest rates, the bonds continue to soar. We got record low rates on all the kind of flight to safety type bonds, so Swiss bonds, Hong Kong, and so on. And here's these rates just over the last 3 days, just waterfall kind of move down. We're in a downtrend on these daily charts, so still got to make pullback to end of trend on these, and we're down at 62 basis points on the 5-year. What's this? The 30-year about 2.5. Just waterfall kind of move down, and it's just everybody's. The money's just flowing into U.S. bonds, and here's the 10-year down at 1.5. Kind of down here, waterfall kind of move down. 40,500 tip bar chart. Now, so we're through here. This was yesterday's activity. We got this kind of, let me see if I can pull it up on a better chart. 4,500 tip bar chart. This move kind of just turned exponential at this point here, with a blow-off activity kind of taking profits, and we just kind of fallen off from there. So that was that kind of spike up here. It was almost kind of testing, coming back up to this breakdown level here, support becomes resistance type thing, and then kind of moves through. We never got that exhaustion buying on the upside with this kind of complex correction that we had after we'd made our bottom here. It's just really weak buying back, testing back up into 1300s. Never got it, and we kind of rolled around, and now with today's activity, the sell-off activity at the end of the day ended up with kind of an exhaustion move on the downside here, but we're still going to make a pullback to end of trend. On the 13,500 tip bar chart, exhaustion selling finally at the end of the day, but that was that spike up kind of activity yesterday into exhaustion buying. Second one, almost like a double top here, bang, we sold off from there. And then midday, we really didn't have that exhaustion selling until the end of the day. We tried, we had the news overnight with the employment numbers kind of come out. We spiked a little bit from there, but all of this were just selling opportunities to get short on the 4,500. You can see all of this activity, flush patterns kind of early on after the employment numbers kind of came out, and it was just opportunities to get short every time until we had that exhaustion selling at the end of the day there. 1500 tip bar chart. In terms of my trading, well, it could have been better. I was looking for an entry. I missed the breakdown here through 1300 through 1290 kind of here. I was actually kind of looking at it, then got kind of distracted, and this is kind of perfect timing for my afternoon. Everybody else, if you're in the US, it's kind of 2 in the morning or something. So, but for me, it was kind of perfect timing to do something about a breakthrough 1290. But and then I was looking for something around here, missed this pullback entry, and was looking for something, and then the employment numbers kind of came out, and here they are. And literally that move took place over 15 seconds. This kind of sell-off was just unbelievably fast. Got in on the pullback, went short at 85.25, got 4 out of this move, and then I tried to get short again and got taken out on my stop. I was short at 84.50 and got taken out with this kind of move past the open. So I started at the beginning of the day kind of break even, which is a real shame. Got short at 90.75, so it was kind of good here. And then for some reason I was wanting to get long at 89.75. I was getting long. I don't know why I was looking at that. I mean, on these 1500 tip bar charts, there was the first exhaustion selling signal what we had was down here. We had nothing in this move to say that I should have been going long. So it's just these combination of these blue bars kind of taking off to the upside, and just thinking around here that we were breaking into a bit of an uptrend here. So anyway, just dumb. Got out with the 2 3/4 point loss here until finally got my act together and got short 87.25, just around here I think it was, and then stretched my target out to 81 and finally got out at 82 after this bullish divergence signal kind of comes in. So I was waiting for this kind of exhaustion selling or a pro signal exit, and as soon as that bullish divergence kind of came in, came within a 1/4 point of that 81 kind of move, and then kind of just moved, got out at 82 instead for 5 1/4 on that move, and then well, we spiked high here until we started to reverse and kind of come back down, but I'd gone to bed by then. So yeah, messy trading. The mistake I made was that long. That was just dumb, but out for 4.5. So yeah, not too bad. Hope you traded it well, and yeah, just going forward, just watch out. I think the mood will change dramatically. I think this is the beginning of this kind of big down leg move. There will be retracements, there will be rallies along the way, but kind of big picture type stuff. And I think there's a lot of kind of people are trying to pump up Apple at the moment, but just don't forget, this thing has run pretty hard, up into the 600s and so on, and flush signal up there. I mean, I thought this thing was over in January, but it didn't. It continued to race away. But psychologically, it's a really important stock kind of going forward, and we've had that pull back to dirty ender trend on the daily chart. So if the market goes, Apple will go with it. So don't get suckered in. There's no reason to rush in buying yet until this thing is over or some kind of announcement of another QE. Hope you traded well today.